Alright, XRP dark pools exposed. Expert says they are stalling Clarity Act to keep accumulating. Now, imagine walking into a high-end auction house where the most valuable painting in the world is being sold. But every time a billionaire makes a bid, the price tags on the main display floor remain completely frozen. To the casual observer outside, it looks like nobody wants to buy it. But behind closed doors, a massive wealth transfer is quietly taking place. This is exactly what some expert market observers believe is happening to XRP right now. On paper, the price seems stuck in a frustrating, narrow trading channel. But behind the scenes, the data tells a completely different story. So in this video, we are breaking down a mind-blowing theory that explains how hidden institutional trading networks, massive delays on the Clarity Act, and rapidly draining liquid supplies are setting up one of the biggest supply anomalies in crypto history. So let's dive straight into the numbers. Now, why is the public price of XRP failing to reflect massive accumulation? If you look at the public crypto markets right now, it feels like XRP has been put into a deep sleep. But according to a highly discussed post shared on X by crypto analyst BullRunners right here, the public order books are hiding an incredible structural shift. BullRunners highlighted that the amount of XRP physically sitting on public crypto exchanges has absolutely cratered. Just 12 months ago, exchanges held nearly 4 billion XRP. Today, the liquid supply has plummeted to approximately 1.6 billion tokens. That is a historic 7-year low. At the exact same time, newly launched spot XRP ETFs in the United States have quietly sucked up more than 900 million XRP. On top of that, major institutional whales have accumulated an estimated 1.5 billion tokens over the last 6 months alone. Now, here's my opinion. When you look at these numbers, the math simply does not compute with a stagnant price. If public supply is down by more than half, while ETFs and whales are locking up billions of tokens, basic economic theory states the price should be moving up. As a market observer, this screams to me that the public order books are no longer the primary driver of XRP's value. The real game is being played somewhere else, entirely out of sight of the retail investors. Now, are dark pools secretly keeping XRP prices artificially low? This brings us to the core of the mystery known as the dark pool theory. BullRunners argues that smart money and massive institutional buyers do not buy their XRP on public exchanges like Coinbase or Binance. If a giant hedge fund attempted to buy 500 million XRP on a public order book, it would trigger an immediate massive price spike, forcing them to buy the remaining tokens at much higher rates. Instead, they use dark pools, which are private alternative trading systems where block trades occur anonymously. Because these trades do not print on public exchange books in real time, billions of dollars of purchasing power can enter XRP without moving the public price tick by a single cent. BullRunners specifically pointed to institutional crypto broker Falcon X, right? Falcon X and its acquisition of digital asset manager 21 shares right before the spot XRP ETF launch. He suggests that Falcon X private liquidity pipelines might be drying up as ETF demand continuously drains the reserves. While this remains an analytical interpretation rather than a confirmed fact, it perfectly explains how a massive drain in exchange supply can happen alongside a completely flat price chart. Now, here's my opinion. Dark pools are the ultimate tool for institutional accumulation. It allows Wall Street to fill their bags at a stable, suppressed rate while retail investors get frustrated and sell their tokens out of boredom. It's a psychological waiting game. They want you to look at the flat charts and give up, while they quietly vacuum up the remaining supply of market. Now, is the delay of the Clarity Act coordinated? Is it a coordinated stalling tactic? If institutions are accumulating behind the scenes, what is holding back the floodgates? The answer lies in legislative progress, specifically the proposed Clarity Act. This legislation would formally establish a clear federal regulatory framework for digital assets, officially certifying XRP's status as a digital commodity. BullRunners pointed out that massive pools of conservative capital, such as multi-billion-dollar pension funds and sovereign wealth funds, are legally forbidden from touching assets that carry any regulatory gray area. They need the Clarity Act to officially pass before they can allocate even a fraction of their portfolios to XRP. However, the bill faces strong resistance. XRP BullRunners noted that power banking figures, including JP Morgan CEO Jamie Dimon, have actively lobbied against fast tracking digital asset and stablecoin legislation. Now, here's my opinion. I don't believe in coincidences when it comes to trillions of dollars. The longer the banking lobby can delay the Clarity Act, the more time their institutional allies have to accumulate XRP at cheap prices via dark pools. Once the legal certainty of the Clarity Act is locked in, the asset becomes institutional grade, and buying at these low prices will be a thing of the past. The delay isn't a failure, it's a window of opportunity for big money. Now, what is the counter argument to the XRP supply shock theory? While the dark pool accumulation theory is highly compelling, a balanced market observer must look at all available data. BullRunners cautioned his audience not to ignore alternative explanations for XRP's current price behavior. First, XRP's price action is still heavily tethered to the broader movements of Bitcoin. Second, prominent pro-XRP attorney Bill Morgan has pointed out that while exchange balances are down, broader ledger data shows that there are still roughly 15 billion XRP floating in liquid circulation globally. This means a literal supply freeze where exchanges run completely dry of XRP is highly unlikely to happen overnight. Now, here's my opinion. It is vital to keep our feet on the ground. A supply shock doesn't mean XRP goes to infinity next Tuesday. We have to acknowledge that as long as Bitcoin dictates the macro cycle, the macro crypto cycle, XRP will feel that gravity. However, the macro trend of shrinking exchange balances is an undeniable pressure cooker. Even if there are 15 billion tokens out there, once institutional demand shifts from private dark pools to public redemptions, that liquidity will evaporate incredibly fast. And finally, here's our overall conclusion. When you connect all these dots, a very clear picture emerges. The public market price of XRP is a lagging indicator of its true institutional adoption. While retail investors are staring at a flat price chart, a massive quiet migration of supply is moving off public exchanges into institutional ETFs and through private dark pool networks. The political delays surrounding the Clarity Act are serving as a regulatory barrier that keeps conservative giant funds on the sidelines, while simultaneously giving private accumulators more time to build their positions. While we must remain realistic about global market liquidity and Bitcoin's influence, the structural setup for XRP never looked this asymmetric. The supply is shrinking, the big players are positioning themselves, and the regulatory fuse is slowly burning. In this final ends our video. Thank you very much for watching, and see you on the next one, or you might just as well check this next recommended video right here.